Welcome to this session. Uh, last time, we talked about Rust area of liquidity and the process we follow uh, to mark Rust area of liquidity, where we first of all uh, talked about manipulation. In order to mark Rust area of liquidity, you have to see manipulation that was created. Then after that manipulation, then you look for that candle that follows here, and that candle did not grab any liquidity, so that's your last area of liquidity. That's your last area of liquidity, because institutions, they have made entry, they manipulate price to go down. So this move that is starting here is the main liquidity. So this is supposed to be a true stop loss. The top of manipulation is supposed to be your true stop loss. Okay. Assuming that I'm trying to draw the wicks, candlestick wicks, and I think you see what I'm trying to do here. So that candle that forms after manipulation is likely to be your basically is your last of equity. If you have played with the chart, you have seen how market comes back to grab last year of equity and then makes a reversal. If you have been checking this on the chart, you may have seen it, okay? You may have seen it. We will see how to approach this, and we will see also how algo works when prices is approaching these areas inside the zones, okay? So today we are going to talk about uh, HS, HCS, if I can say, high conference setup, and how it looks like, because I've seen some people don't understand exactly what we mean by what we mean by HES. HES. HES stands for high confluence setup. High confluence setup. High confluence setup. High confluence setup. So this is this happens when you have more than one manipulation forming in the same zone. Okay. So for example, it forms in different variations. I will show you. Uh, I'm starting with the basic one. Assume you have a bullish candle around here, and then, for example, you have another bearish candle around here. Then this bearish candle purged liquidity, okay, on the previous one, on the previous high, okay. So you have a previous high around here, a previous high around here. Now this is a bearish candle. Now this has purged liquidity, okay. So this is a normal manipulation, okay. Because you have taken the high, then you make a reversal. So it's a normal manipulation, okay. Now, you know, when we are trading, when you have seen manipulation and you want to trade, most of the time you are going to wait for a retest. A retest is usually your rusty area of liquidity that is being created. For example, if this candle is here, you may see, for example, another candle coming back to test this area. For example, after testing this area, then it goes down. Your rusty area of liquidity is being formed as a test. Okay, this is your rusty area being created. Okay, for example, this is just an example. You have a pattern like this. Then after some times, market comes back. Market comes back again. For example, after this pattern, assuming that after this pattern, you see a negation is created. Okay, a negation is created. A negation is created. Okay, so that your candles are like this. Then a negation to the outside. Okay, is created. This negation comes, for example, in the form of a bullish candle, for example. Okay, negating this bearish move is negated. Okay, and this is the high. Then after this, for example, after this, you're going to see another candle is created. For example, another bearish candle. Another bearish candle is created around here. Okay. For example, another candle is created around here, which is a bearish candle. Okay. Now, if you look closely, for example, it looks like this. Okay. If you look closely, you have seen a manipulation was created around here. Previous high was purged. Okay. Previous high was purged. We have a few forming. Okay. Now, a new candle comes back to test this area at the same time, creating what? Creating another form of manipulation. Okay, as you can see. So we have two manipulations. This is the first one. We have the first one. This is the first one we have. It's the first manipulation. It's the first manipulation. This is your first manipulation you have here. And then you have the second one. You have the second one around here. So this is the second one. This is the second one. This is what we call HS, high confidence setup. This shows that institutions are willing to go high. This pattern is very strong. Okay, this is very strong. You can use it most of the time when you are on a time frame. For example, you see manipulation and you wait for example, another high confidence setup, another test that generates another manipulation. Mind you, if you want to enter here, secure stop loss zone is still above. Okay, still above here. You have to understand about the HS. If you are marking the zone, this is your HS zone. This is your HS zone. Okay, this is your HS zone. Okay, where you have what? Where you have manipulation like this. Okay, so this is just an example I'm drawing. It can form in different ways. Okay, for example, instead of having many candles, it may be like this. For example, this one comes here and still reject, for example, like this. This is still this is still NHS because you have manipulations again. Okay, you don't have to have many colors. It can even form like this. Okay, manipulation, another manipulation. Manipulation is tested after during the test in new manipulation forms. Okay, that's what we call high confluence setup. High confluence setup. Okay, that's how we call it. Then uh, there is another way. Another way, for example, I will have to draw something here so that you fully understand what I'm trying to mean. Assume you have a chart. This is the chart. This is downtrend. This is downtrend. Okay. Then here, for example, you have a manipulation before a pullback forms. Okay. For example, you have a bearish candle around here. Watch closely here because it will save you. You have a bearish candle, and this is the low. This is the low. This is the high. Then this candle is manipulated. Okay. You have a manipulation to the upside. So you have another candle trading lower. After trading lower, it makes a reversal and becomes a bullish candle. This is a bullish candle. Then this is the low. So you have a few. Okay. Remember, we are still going down. Okay. We have a few. This is a normal pullback. Okay. I'm trying to show you a normal pullback. Okay. Then maybe here you have another negation forming. Price continues to go down. Okay. You have so many charts going on here. And then, for example, once price is here, price comes back, and around here, you get another manipulation. Okay. You get another manipulation. Around here, you get what? You get another manipulation. I'm trying to copy. Around here, you have what? Around here, sorry guys. Around here, you have another manipulation forming. Okay. You have another manipulation forming. Just trying to join. Okay. Now, you have another manipulation, for example, forming around here. And then the chart will continue to go up. Okay. The chart continues to go up. As you can see on the left side, sorry, on the left side, you have a manipulation. Here the chart continues to go up. On the left side, you have a manipulation, okay? On the other side, on the right side, you still have what? Another manipulation on the same area, okay? This is also what we call HS, high confluence setup. High confluence setup, okay? Even if there are so many candles, there are so many charts, this is a strong zone. We call it the high confluence zone, high confluence setup. For example, if you want to mark the zone, you can mark this manipulation area as a strong area to pay attention to. Okay, as you can see. Okay, this is one way. You can see what? You can see HES, HF, HCS setup. Okay, high confluence setup. As you can see. So pay attention. I hope you understand. I hope it's clear. Okay. Even if you look left and see manipulation, you see more manipulation that forms like this. That's a strong institutional zone. That is a strong institutional zone. Okay. Now that's another way. Have you seen candle to candle HS where you see manipulation being tested by another manipulation? That's what we call candle to candle HS. Then here we have where we see a big chart. Every setup is far away, but on the same level. That's what we call another form of HF setup. There is also what we call inverse HF setup. How does it look like? For example, I'm going to use I'm going to use I'm going to use I'm going to use this candle. Assume the price is here. This is a bullish candle. This is your bullish candle. Okay, this is your bullish candle. The chart is here. Okay, the chart is here, and then this candle has a high. It has a high. It has a high. Okay, this candle has what? This candle has a high. Trying to draw it better. Okay, very nice. This candle has a high. And then we have another candle manipulating to go down. Manipulating to go down. Okay. Manipulating to go down. So you have FU to the outside. It's your FU to the outside. Then you have, for example, FU or FU to the downside. As you can see, it was tested in inverse form, okay? As you can see. Okay. So this is another form of HS, okay? Okay. That's it. That's how we call it, okay? So this also is what we call institutional zone. Institutional zone, okay? Strong HS. If you have to mark, you can mark this the top right there and the bottom around here, okay? Like this. This is institutional zone, okay? Once it's broken, market is likely going to test it, and then you continue to go higher, okay? So this is what we call HS, okay? So we have seen ways to mark it. We have seen free ways to see it, okay? We have seen free ways to see it. Candle to candle, or when you have a big chart and with this different variation, as you can see. So this is how to mark HES, okay? So with that being said, you can use the chart, try to see if you can find good examples. See if you can find a good examples, okay? We check weekly, daily, 4 hour to see if we can find what good examples of what we call high confluence setup. High confluence setup. High confluence setup. We use it 4 hour. Let's see if I can find one. See if I can find one. If I don't find one, I can use what? I can use 1 hour time frame. 1 hour time frame. One is training. So let's try to see if you can find a good setup that will be easy for you to understand. For example, if I ask you to mark a good zone here, you can see yourself this level. You can see this level that was manipulated. Okay, and you call it, for example, activity FU. And then during the test, we got another one here. Another activity FU. It took a longer time to test, but after it was being tested, after being tested, we got what? We got a sharp move, making this a strong zone. If you look at this area, the whole zone here, this is what we call institutional zone. After grabbing this doji, this liquidity, and the testing this activity FU, market went higher. Okay, this is a strong zone, a strong zone. Having market closing below it, market is likely going to come back to test the zone before it goes down. Okay, so this is the skill you have to know. You have to understand it. Okay, market is likely going to test the zone and then continue the move. This is just a simple example, but I need a good one. Look at here, what you call HS. Okay, candle to candle until the FU. Until the FU was generated around here. Making this candle longer so that you can see them. You can see here, you have until the FU was created, purging this liquidity and then went higher. Okay, this is until the FU that was formed around here. Now, after this until the FU, you can see this candle that came back to test was your primary entry. Okay, because this is the last wave of liquidity being created. Okay, then after being created, market came back again to grab it. Okay, as you can see, it was taken here, and this one was also taken here. As you can see, every candle was purged. Okay, this one was purged and this one was purged. Okay, creating another FU to the outside. Okay, so this is a high confluence setup, meaning institutions are very interested here. They are adding more buys, purging, adding more buys. Okay, so to mark the zone, mark it like this. Okay, you mark it like that. Hope you can see that. This is HCS zone. Okay, this is high confluence setup. This is a high confluence setup. That's a high confluence setup. I will try to find another one. So look at this area. Look at this area. HS in inverse form or inverted HS. You have HFU to the downside to push price lower. And then you have what? Here, after being broken, a new FU was formed around here. A new FU was formed around here. A strong FU was created around here. Someone trying to join or someone is leaving. Okay. So FU was created around here. Okay. This is inverted the HS. Okay. So from this low to this high, this is your HS zone. This is your HS zone. Okay. So if market comes back inside this zone, it's likely going to reject. It's likely going to do what? It's likely going to reject. Okay. Because it's a strong area of manipulation. It's a strong area of what? A strong area of manipulation. Okay. Now, look at what I've been drawing. Even if you have so many, even if you have a big chart around here, if you look at, for example, this area, the key, if you want to understand this, is to mark the chart, okay? First of all, study every move, how every move started, okay? Once you do that, it start clicking, okay? For example, you study this area. You know this is what? This is activity FU to the outside, okay? I mean, if you to the up, to down, to price drive to drive price lower, okay? Now, look what happened around here. This candle. Okay, this candle. What happened is a strong FU, a strong FU, okay? A strong FU to push price lower. Bearish FU, okay? As you can see, if you look closely, it's testing this zone again, okay? This is what we call HS, high confluence setup, high confluence zone, okay? So you can mark the zone like this. If you see, as long as market manage to break with the body, okay? It must break with a body, okay? As long as market breaks your body, okay? Look what happens. It's trying to come back to test the zone before it goes higher again, as you can see. So even if you may have a bigger chart, even if you may have a bigger chart, you still have what? Oh my God, someone is asking me a session. I thought it was in a group. Let me text.
Yeah, it's in the chat, Master.
You don't see the chat?
No, in the chat. In the chat box, you can ask questions.
You have set the question?
Yeah, I asked question in chat box, in text box.
On the Meet or Telegram?
On Google Meet. In the right right corner, but the bottom below, you have like message box.
Okay, let me check. Chat box.
Down below in the middle, down below in the middle.
Yeah, I can see.
Below?
I
Yeah.
can see the problem is my mouse is freezing. I don't know.
Ah, okay.
How to use, I have, there are two questions. How to use last area of liquidity in the HES. We will talk about that. We talk about that, those stuffs, because this time I'm trying to explain what HES is and how it forms, how it looks like. That's area of liquidity in HES. Good question. We would also like to know reverse the HES. Okay, Roy and the Amen. I will talk about that. I'm trying to, we are still doing what? We are still trying to understand how the pattern forms, because there is some people who don't actually know how HES looks like. Okay, we are trying to explain the setup, how the setup looks like. Then later we dive that deep into that. When I start showing you guys how algo trading works, with this, it will be very, very sweet and fine for you, I'm sure. this time we are trying to understand how this forms, how the pattern looks like. Okay, how the pattern looks like. Okay, we are trying to understand how the pattern looks like. Now, we are trying to understand how the pattern looks like. Okay, so this, even if, as I told you, even if even if you have even if you have a chart that looks like this, no matter what you see, if you have a manipulation here, and this manipulation was tested by another one here, even if there are so many candles, it's going to be your HES zone. Okay, even if you have a manipulation here and you have a manipulation here, even you have a bigger chart somewhere here, as long as you see one has tested another and a new manipulation create the same zone, that's what we call HS. And this is what we are doing here. This is what we are doing here. We are trying to study this pattern. I have seen your questions. We are trying to study this pattern as of now, okay? So here you have until FU that was created around here. And then you have what? You have another liquidity grab that was taking place, that has taken on this last area of liquidity. You can see a new candle came back to take this last area of liquidity and the same adding more manipulation into this one. Okay, this is your HS setup. Okay, hope you can see that. Hope you can see that the form in, you will see this regardless the time frame you are using. Okay, whether you use 1 hour, whether you use 4 hour, you are going to see that. You are going to see that. For example, look at this area. Look at this until the FU to the downside. Then look here, this one also. Until the FU to the downside. Okay. This is another form of HS setup. This is the zone. As you can see it's clear. Your eyes can see it. Okay. This is HS zone. That's it. So that's it. That's how we do it. Okay. Now look at here. You have until the FU to the outside, as you can see. Now, if you look at here, this candle until the FU to the downside after testing this zone, inverted HS. Okay, inverted HS. This is your HS zone. Like this. This is your HS zone. Okay. So if you see those reactions, you have to understand why it's happening. Okay. It's vague as of now. It will be clear when we start showing you exactly how market look for structure. There is a simple way I will show you how market works so that you know when to expect a buy or sell. For example, you know when if market is touching here, price is likely going to react. Okay, or if price is gonna touch this area, okay, price is going to react. I will show you that. I will show you that. It's simple, very very simple. You will see that once we start talking about that. Okay, when we start talking about that, you will see that. I think there is someone who asked me why did I say market was likely to buy from here. I think someone asked me that. I don't know if it's Jerika. I don't know. I think I saw a question on Telegram. So there is a formula. There is a formula. There is a reason. I will show you. I will show you, and you will understand. You understand, okay? You understand why why this candle is selling from here. You understand that, okay? How Argo works. You understand. You can see. You understand that, okay? You understand why if it is pushing, you have to wait until it touches somewhere around here, okay? Because that's how the algorithm works, okay? For example, from here, from this setup alone, a valid trade is supposed to take below here, for example. But market may decide to use a wrong time frame here to move and then come back later. Okay, because that's how it works. Hunting liquidities. Okay, we will see that. This time we're talking about the HS. I'm trying to find good examples. This session will take a longer time. What I want you is to look at the zones and be able to identify what? Be able to identify HS zone. Okay, HS zone. For example, if you are here, you look at the key is to mark the chart. If you don't mark the chart, you are likely not you are unlikely to find it. For example, this area, manipulation to the outside, and it was negated around here. But if you look left here, during this test, this zone was tested with another manipulation to the downside, another strong HS. Can mark the zone like this. Okay. Can you see? This is your HS zone. Can mark it like this. As you can see. After market trade below it, try to test adding more. As you can see, institutional zone. Look at it. Another manipulation is forming again in the same zone. Okay. It's what we call HS zone. You have to mark it. You have to see the source of the move. Okay. The source of the move. Okay. Look, manipulation, another manipulation, trade lower, another manipulation forming the zone. Then we are going down. Okay. That's how it is. Okay. Look at this area. Look at that area. Example, if you take this area again and you go to the left and you see the manipulation forming, then if you mark the zone, you can see what was going on. Manipulation, test, another manipulation, break, another manipulation in the zone, price comes back, reaction, okay? Goes down. So that's it. It's what we call HS zone because you have a multiple manipulation in the same area. Okay, same area. They can form in terms of one candle to another when they are closely, when they are together, they are close each other, or it may even form in a way that is strange like this. The key is to understand how the pattern forms. Okay, the key is to understand how the pattern forms. Okay, and see multiple ones. And see yourself. Manipulation here. Price goes higher, negation forms. Price goes down again to take out the liquidity and negate the candle. And negate the candle has liquidity on the other side, which is here. So this is liquidity target after this negation. You understand that. Now HES forms, okay? This is the zone. So we call HS strong signs that price is willing to go higher. Okay. So that's it. Um, that's it. That's it for today. We don't have to take a longer time. I think it's clear and understandable. And if someone has a question, doesn't understand how to draw this pattern. This time we're drawing patterns only, okay? We're drawing patterns. Maybe next session we'll go somehow deeper. By this time, I want to make sure that everyone understand the key concept, the whole idea about HES and how to mark them. Key idea about HES and how to mark them. Will you upload? Of course, I'm recording every session must be uploaded. Every session must be uploaded in the Google Drive because I'm recording. So this HF is not hard as long as you understand the manipulation. Understand that it's much like um, it's much like the double manipulation or triple manipulation or more than one manipulation in the same zone. That's it. That's a simple definition. More than one manipulation in the same zone. That's what we call HS, high confluence setup. The rest is all about understanding different variation, candle to candle, or when you have multiple candles. Do you have successive zones? Like, I don't understand your question. What do you mean by successive zones? When they are closely related? How? What do you mean? Or you can draw, maybe you can draw or find example of what you're asking. I love it when I see images. Find example of what you are asking. You can even draw it and then post in a group. Then I will I will try to reach you. Okay. So HS, this is HS. Manipulation tested, another manipulation forms. Okay. This is strong HS. Okay. This is zone. This is the zone. Okay. So this is zone HS. So it's all about understanding. It's all about understanding. It's all about understanding how manipulation forms and how they are closely related to each other. And then you see ways to mark it correctly. Okay. It forms in every time frame. And if you see it during your entry, that shows that institutions are really, really interested in that move. Okay. They are really interested in that move. When you see it in your key zone, when you see it in your key zone, for example, you want to make entry here, this 2 hour rust area of liquidity is taken around here. This was initial manipulation. Then price comes here and grabs rust area of liquidity, and then a new activity FU is created. This shows that institutions are willing to go down. They are very interested in this move because they have manipulated to go down. They come back again in the same zone. They manipulate again to go down. That means they are really interested in this zone to go down. Okay, that's it. This is a strong HS setup. This is an HS setup, high confluence setup. Okay, high confluence setup. Hope it's clear. Hope it's clear. Okay, this is high conference setup. As long as you are able to see it, as long as you are able to see it. So this is it. A chain setup is not something. It's not a big deal if you understand how to mark manipulation. It will not be hard for you. It's very easy. It's all about understanding how the inverse version is formed, and then the normal one, as well as the one we mark when we have multiple candles, how to identify it when you have many candles. Okay, when you have a bigger chart, for example, one is formed here, another one is formed here, and you are able to spot it. That's it. That's enough. Okay. Then the rest, next session, will be going deep into uh, how to find zones, and then later we'll talk about algo and how actual market sells, how market buys and sells. Okay. Because things I'll be showing you, if you wait for it and you wait for it to form, I'm sure we'll start seeing what? We'll start seeing a setup. For example, if I tell you, for example, let me show an example. I may say, okay, whenever you see a structure, for example, whenever you see a structure forming, for example, like this, you have a market going down like this. Market has taken this low, and I tell you, never ever take any sell until market comes back to grab a certain high. Okay, because that's how algo rhythm will be working. Okay, if it is here, you are not going to do anything until it takes certain high, and then it can just go down. If there is nothing here, for example, there is no high here, there is nothing, there is no structure here. Okay, so wait until market comes back and it tests this area alone. Alone. For example, like this. And then once it is here, go through a time frame and see something. Okay, you will see that. For example, price is here, price is here, price has taken this low. Price has taken this low. After taking this low, any pullback that forms, don't trade. Okay, market pushes down. Any pullback that comes, don't trade until it goes up to take a high around here. Okay, after taking this high, go through a time frame to see something. So if price drops around here and doesn't create any swing point that will be taken, wait for market to come back to test the low. Once it tests the low, look for opportunity. Okay, look for opportunity. You see that? That's something we'll be talking about when we talk about how algorithm look for liquidity and how it mitigates. Okay, that will also add zones. We will not look for this everywhere. We'll be knowing exactly the right zone we are going to use to apply this concept, and then work with manipulation. Okay, because if price here and I tell you go to a time frame, like go to 5 minutes or 1 minute, and I show you a signal that we'll be looking for, that will be enough for you. I don't know if you have that chart, but it's way further. Ooh. Let's see. For example, let me use the closest one here. Price has dropped. Went until we test the zone. At least that area alone. If no touch, stay away. Okay. Now, price here. Say go to like 15 minutes or 5 minutes. Okay. in 5 minutes, after touching that zone, manipulation is created. And in 5 minutes, we use our time frame most of the time in this case. Okay, manipulation is created. Okay, then possible opportunity must be formed. Okay, so here price breaks again. We wait for price to take this high or to test this level. Okay, they go to 1 minute, for example, see if you can find opportunity. Sharp move. Okay, sharp move. But as long as you know it by adding the zones. Zones we'll be talking about. These are not the zones. Okay, these are liquidity and mitigation efforts. Those are not the zones. Okay, you can wait if this strong weak. This is liquidity to fill or to take. So you have to wait to see if this is going to be left behind. Okay, then another manipulation forms on this candle until it takes you to downside. At the same time testing the zone, you are leaving the main zone. You can try your entry maybe around here. Okay, stop loss above, and then capitalize on that move. Okay, price has broken with this liquidity, have liquidity to this level. At the same time, you must wait until, for example, this level is mitigated. Okay, it's a simple process. You will love it. Okay, and then use your time frame for entry. 5 minutes. Okay, 5 minutes. As you can see, manipulation was very strong. 3 minutes. As you can see, somehow very challenging. You can be stopped out somewhere around here because this negation, you can see, in case you're using small stop loss. Okay, but here you can see there was a good entry point, but you can still get stopped out here if you use a small stop loss like me. Okay, hope you understand. So that's it. That's something we'll be talking about uh, when we start discussing about algo and the zones. Okay, so thank you guys. Until next time. uh, Good luck and good trading. I'm going to upload this session in the Good Drive, so make sure you check and then rewatch again. It was about the HS, nothing else. It was only about the HCS high conference setup. These things I'm talking about are not part of this session today. So, guys, thank you. Good luck and good trading. Me out.